Welcome, and thank you for joining us for today's webinar entitled A Look at Operational Risk Management in China's Banking Industry, brought to you by Kapronasia. My name is Paul Robinson. I'll be acting as the webinar moderator. Although Chinese banks have, in the past, not put a tremendous amount of focus on risk management, recent events and comments from regulators indicate that risk management will definitely become more of a focus. In this, the first of a series of webinars on risk management in China, we'll look at the operational risk management in Chinese banks in order to explain what it is, how and why it is different in China, and what will happen in the near future. In this informative 45-minute webinar, we'll also give you an in-depth look at the opportunities and challenges for banks, as well as the potential implications for vendors and vendor solution offerings. Now, I do need to inform you that today's session is being recorded and is run in listen-only mode. However, we really want to encourage feedback and questions from you throughout the webinar. To facilitate the discussion, we'll be using two features of the webinar software. The attendee viewer on your screen is made up of two parts. The first is the viewer window, where you'll see the presentation, which I recommend maximizing now so you can see the presentation in full screen. The second is the control panel, where you can interact with us. Now, this control panel can be opened and closed by clicking on the arrow button on the Grab tab. In that control panel, you're welcome to submit questions and comments to our presenter. We'll be answering as many of these as possible throughout the presentation, and also at the conclusion of the presentation too. Our presenter and host today is Fei Zhu, one of Kapronasia's analysts. Fei is joining us from Kapronasia's head office in Shanghai, where, as one of Asia's leading providers of independent research, custom consulting, and advisory services focusing on the financial industry and financial technology, they help clients understand and navigate the challenges they face in a region with a rapidly changing business, operational, and technological environment. So let's get the discussion started. Let's hear from Fei. Fei, go ahead, please.
Thank you for the intro, Paul, and thank you everyone for joining us today. During this webinar, we will discuss recent findings about operational risk in Chinese banks. In this presentation, the findings are mainly based on the secondary research, which includes internal knowledge, government, vendor, and financial institutions reports. The purpose of this report is to identify the current trends of operational risk in Chinese banks, define characteristics of current operational risk issues, compare Chinese and international regulation on operational risk management, and provide recommendations for banks to improve their operational risk management. In the first section, we will give a brief introduction to the sources of operational risk. Operational risk is not limited just to banks, but exists in all enterprises. The Basel Committee on Banking Supervision defines it as the direct or indirect loss resulting from inadequate internal processes, actions of people, external events, or systems. Beyond monetary losses, operational risk also brings reputational and strategic risk. And inappropriate strategy also could lead to business failure. Operational risk also can bring reputational damage to an enterprise. According to the definition, the sources of operational risk mainly from four elements. They're from internal processes, action of people, external events, or systems. Based on the Basel Committee, there are 7 operational risk event types. Internal fraud is the first one, which refers to the losses due to acts of a type intended to defraud, misappropriate property, or circumvent regulations, excluding diversity discrimination events, which involves at least one internal party. Credit fraud and theft are both examples of internal fraud. The second type is external fraud, which is similar to internal fraud but without an internal employee involved. Examples include external theft, robbery, and hacking damage. The next type of operational risk issue is employee practices and workplace safety. The loss in this type of risk arises from acts inconsistent with employment, health, or safety laws, and regulations such as workplace injury and discriminations. Examples include termination issues, discrimination, and working environment safety. Next type, clients, products, and business practices refers to the failure to engage in correct business practices. Money laundering and market manipulation are two examples of this type. The activity examples include fiduciary breach and improper trade. Natural disaster and terrorist damage are examples of damage to physical assets events. Losses in business disruption, system or control failures are caused by failure to systems such as hardware, software, telecoms, or utilities. Examples include hardware or software failures and utility outage. The last event type is execution, delivery, and process management. It includes data entry issues, improper collateral management, failure to make timely regulatory or legal disclosures, and damage to client assets. The activity examples include miscommunication and inaccurate external reporting. In section 2, we will give you an overview of the operational risk in Chinese banks. The figure you see right now shows the trend of unqualified banking institutions and senior executives from 2004 to 2012. During 2012, there was 1.16 trillion yuan of losses due to risk management and 1,553 penalized bank institutions. This resulted in either the dismissal or reprimand of 55 senior executives who were then classed as unqualified. Since the CBRC, the Chinese Banking Regulatory Commission, released few guidelines with regard to operational risk management during the period from 2006 to 2008, we can see a sharp drop in the number of disqualified senior executives from 2006. However, the case number and loss amount related to operational risk are still very high in Chinese banks. Also, here we can see in 2009, the unqualified banking institutions increased significantly. This is because the rapid business development and profit growth in the background of financial crisis. Among all the operational risk event types, internal fraud represents the most common form of operational risk, which comprises 52.37% of all risk events. It implies that the internal fraud events are the main source of operational risk in Chinese banks. These are the major operational risk events that happened in the past decade. We can see that internal and external fraud are the main event types in Chinese banks. Also, the loss amount is large enough to warrant attention. We'll go through a couple typical operational risk events in Chinese banks here. The first one is internal fraud, specifically in the wealth management space, and second one is loan default. Recently, there have been many internal fraud cases when bank customer managers introduce wealth management product to customers. Many bank customer managers exaggerate the profit return and neglect to disclose the risk of the wealth management products when promoting them to customers. It happened in CITIC Bank, one of the major banks in China. The branch vice president actually sold wealth management products to customers, but he used funds for other purpose. He invested funds to other unqualified firms. Because the underlying investment failed, CITIC Bank failed to return the investment back to customers. It also happened in many other banks that bank employees raise funds from bank customers but invest on other risky projects, so bank customer cannot receive back their money and promise profit. The second one is borrower default. It is related to credit risk, but we consider it is also an external fraud case here. This has increased recently because of slowing business since the financial crisis in 2008. In the slowing down economic environment, there are many firms have gone bankrupt, and in certain cases, the borrower has defaulted and run away. In international banks, instead of internal fraud, the risk event type execution, delivery, and process management and external fraud are actually the two main operational risk event types, which accounted for 44.6% and 26.5% of fraud among all the risk event types. When we compare the percentage of amount loss, internal fraud accounted for the largest percentage of amount loss in Chinese banks, which is 62.4% of total losses in all the operational risk events. On the other hand, risk events such as clients, products, and business practices, and execution, delivery, and process management account for the largest percentage of loss in international banks. Among the categories of systems in Chinese banks, the spending on business intelligence and risk management software and systems is larger than the rest of the categories. We can see that Chinese banks are willing to spend more to upgrade systems in order to improve risk management. Let's move to the next section, which looks at operational risk management policies. And this section, we will also compare the international regulation with Chinese regulations. Currently, there are three main guidelines for operational risk management adopted in Chinese banks. The first one is Chinese Commercial Bank Operational Risk Management Guidelines. This one focuses on improving the risk management in commercial banks by defining responsibility from the top level of the organization down to the frontline employees, and clarifies the operational risk management policy, method, process, and capital requirement. Second one here is Chinese Commercial Bank Internal Control Guideline. It is in place because internal fraud is the major source of operational risk, as we discussed earlier. The purpose of Chinese Commercial Bank Internal Control Guidelines to accomplish bank business objectives by preventing and controlling bank internal risks. It addresses rules on aspects of legality, accuracy, authenticity of accounting information, and loan approval system. Last one here we see is the guidelines for the measurement of operational risk regulatory capital of commercial banks. This one is kind of similar to Basel II, which also provided three approaches. This one is the same, introduced three approaches for measurement of operational risk capital requirement. Compared to the standardized approach and alternative standardized approach, the advanced measurement approach allows banks to adopt their own empirical model to quantify the capital for operational risk. Because of the lack of data collection, many Chinese banks adopt the standardized approach or alternative standardized approach instead of advanced measurement approach. Basel III is the global regulation on bank capital adequacy on risks. Basel III implementation in China will actually have higher requirements than Basel III stipulates itself. The total capital requirements increased to 10.5% from 8% in Basel II. We can see the purpose of Basel III is to require higher quality and also quantity on capital and to strengthen the concept of comprehensive risk management. In Chinese banks, the Basel III was adopted in the beginning of 2013. The capital adequacy ratio for systematic important banks is 11.5% and in non-systematic important banks is 10.5%, as the same as international standard. One thing different in China is that CBRC encouraged the loan granting to small and medium enterprises. So Chinese banks will lower the risk weight for small and medium enterprises when calculating the capital adequacy ratio. The total capital requirement targets on 9.5% by the end of 2013 and 11.5% by the end of 2018. Moreover, we see here the leverage ratio in Chinese regulation right now is 4% compared to 3% leverage ratio in Basel III. Here is a comparison on operational risk regulation and management. Compared with international regulation on operational risk, Chinese regulation focus more on internal fraud, which it is the main type of risk in Chinese banks. The international regulation emphasizes information disclosure and business ethics to mitigate operational risk. International banks usually have an independent operational risk management department. However, we see here only few Chinese banks have established a separate operational risk management department. Chinese regulation should draw attention to data collection, as the lack of data collection impedes the progress of operational risk management in most Chinese banks. Recently, there are only 6 banks which are preparing for the advanced measurement approach in China. Our last section of this webinar will provide recommendations for operational risk mitigation. Well, some people ask why we need to improve operational risk management. Operational risk can be driven by new legislations, products, technology, or maybe with higher business volume. So basically, any changes in a bank's business model can possibly lead to new kinds of operational risk. On the other hand, when an institution improves its operational risk management practices, it can bring benefits as reducing losses, improving quality and stability of earnings. Therefore, without operational risk management, banks are exposed to greater risks on a regular basis. Here we summarize some recommendations on operational risk mitigation based on the recent findings on operational risk in Chinese banks and comparison to international operational risk management experience. First one, we'll talk about the governance structure. Because operational risk can be mitigated with a good governance structure, Chinese banks need to establish an independent operational risk management department and commonly by restricting the authority of senior management, who may have interest in not following rules to protect themselves and prepare risk event responses prior to the risk event occurring. In most Chinese banks, there is a risk management department, but they do not separately manage operational risk. In order to better monitor and control the operational risk, Chinese banks may consider to build an independent department instead of making all the risks, managing all the risks in one department. Based on our finding, only ICBC, the Industrial and Commercial Banks of China, has a separated operational risk management department among the 5 biggest state-owned banks in China. Since internal fraud is the main source of operational risk in Chinese banks, and based on previous industry examples, senior executives often violate regulations. The operational risk management regulation should limit authority to senior management. Chinese banks can also prepare solutions for each operational risk event based on their own business features. So when the losses or event occurs, they can apply the prepared solution to solve the problem. Second here, to build an operational risk management culture is crucial to a bank because we find that many frontline employees violate rules because they don't really understand what operational risk is. The bank can organize regular operational risk training sessions to educate new employees. And bank management also needs to motivate employees to the right direction. While maintaining a relatively higher profit, the quality of service and business ethics also cannot be ignored. Thirdly, banks need to improve the risk event reporting by making it usable for further reference. In order to implement advanced measurement approach in the future, Chinese banks need to boost operational risk loss data collection today. And a good risk event reporting system also support and improve the loss data collection. The other way to improve loss data collection is to share and apply external loss data for reference, but banks have to apply the external loss data based on their own business features. From the information system aspect, banks always need to adopt up-to-date risk management systems and techniques and ensure that backup facilities are established. Finally, we have insurance here. It can be applied to reduce the losses arising from operational risk. As a contract of compensation provided by the third entity for specific potential future losses with a payment, insurance can transfer away part of the losses. The loss arising by natural disaster or terrorist activities are secured to some extent when operational risk is transferred to the third party. We also have to mention here that the application of insurance does not limit it to the damage to physical asset, but also other risk events as well. CBRC facilitates the insurance products designed based on each operational risk event type. So Chinese banks will be protected if they aware and implement different insurance products to mitigate operational risk event. And that's all for our recent funding on operational risk. Hopefully, our funding will assist Chinese banks to improve their operational risk management. Thank you for taking the time to attend the webinar today. At this point, I would like to hand it back to Paul, who will address any questions that you may have.
Okay, well, thank you very much for that, Faye. That was some absolutely amazing information. Thank you again for sharing that with us today. Now, as I mentioned at the beginning of the webinar, we are taking your questions here via the question and answer panel as well. So while Faye has been talking, a number of those have come in. So I'm going to sort through them all and we're going to put them Faye's way and we'll get some answers from her as well. Now, you are more than welcome to continue submitting those while we go through these too, and if we have time during the webinar to get those answered, we will, and if we don't, I'll give you towards the end of the webinar what we plan on doing with those for you as well. So with that said, Faye, it looks like the first question has come in from Rebecca. Question says, why is internal fraud the main risk event type in Chinese banks?
One of the main reasons for internal fraud in Chinese banks is the focusing on achieving the target goal for frontline employees. So if the frontline employees, they cannot achieve the goals set by their managers, they will be fired. So it's a good way to motivate employees, but it also increases the possibility that employee achieving goals by violating regulations. And the second reason is that senior executives always have the authority to assess different accounts or obtain information on risk performance. That's why Chinese banks need to restrict senior executives' authority, and regulation institutions should enforce the regulation on unqualified senior executives. Hopefully that answered the question.
Yep, I think that was good. It's always a bit of a worry when the senior executives have access to that much information without the risk going on behind the scenes and looking after them. But at least you've given us some ideas as to how to prevent that too. Okay, now the second question here, this one comes from Jackie, and it says, how can the industry increase operational risk loss data collection?
One problem here is that one issue here is that a lot of employee they don't really want to share the loss data because they don't want people to know they made mistake. So we need to encourage employees to share the loss data and educate them the data will not be applied against them. Chinese banks need to emphasize the importance of loss data collection for operational risk management. Employees in different business units should be able to assess the system to report risk events. So whenever the issue occurs, they can put into the system and get the loss data recorded. And it is a risk identify process. So Chinese banks need to collect, sort, and update the information. Chinese banks can use external loss data for reference based on their own business and governance structure and compare the risk events. Yeah.
Okay, good. Okay, there's a few more that have come in while you've been talking as well, so let's get through those ones. Next one comes from, this one's from Alan, I think. Yeah, Alan. It says, what improvement do you see regarding operational risk management in Chinese banks?
Um, I think we can see from the figure we showed, the first figure we showed, that after 2007, after CBRC issued few guidelines for improving operational risk management, we saw a significant decrease in operational risk case penalties. So also, CBRC put some efforts on on-site inspections, enforced supervision, performance monitoring, and auditing. Some banks, such as Everbright Bank, those banks are also applying automatic operational risk regulatory capital measurement. So the operational risk data can be used by other risk warning systems to expand the application of operational risk data. And also, Everbright Bank applied the three tools, the risk control self-assessment, loss data collection, and key risk indicators, which form the start of their operational risk management system implementation.
All right. Well, thank you very much for that one as well. Thanks, Faye. Okay, well, look, just taking note of the time here. We've just gone over the half-hour mark, so let's just finish off here with one more question. It's a rather important one that talks about Basel III. So let's ask it. It also comes from Helen, I believe, this one, and it says, what will the impacts after the implementation of Basel III be on Chinese banks?
Um, Actually, we don't really see any impact in the short term because the difference between Basel III and Basel II is that the capital adequacy ratio in Basel III is higher than Basel II. But actually, in most Chinese banks, their capital adequacy ratio already reached over 10% 2 years ago. But one thing we found may affect Chinese banks is that the increased liquidity ratio, because there is a high percentage of mid and long-term loans, which could potentially bring liquidity risk. And also the stricter rule Basel III require may restrict the development of Chinese banks, and banks business may grow slowly in the short term in China, but in the long term will be healthy for Chinese banks as well.
Okay, good, good. Okay, well look, let's as I said, let's finish off on that note. There's been some great information there as well. And as I said, we've been busy answering some of the questions that have come in behind the scenes. Now, of course, if you have any further questions that you feel you'd like to ask of the folks at Kapronasia, specifically of Faye as well, you're more than welcome to submit those. And when we end the webinar, there'll be information on how you get those questions to Faye and the rest of the team at Kapronasia as well. Now, as mentioned during the webinar today, the discussion was based on Kapronasia's upcoming Chinese bank operational risk management report. The report offers a critical insight into operational risk management in Chinese banking sector. It is available as part of Kapronasia's subscription service. If you haven't already registered for this valuable service, we'll also be providing a link to do so in the email you'll shortly receive thanking you for your attendance at the webinar today. In that email will also contain a link to the recording we've been making of the presentation, so that way if there's any information you've missed or you just want to listen again at your own pace, you definitely can. Now once again, Kapronasia appreciates your time today and hopes that you found the information informative and helpful. And of course I'd like to thank Faye for her great presentation here today. Thank you very much for your attendance. This concludes our webinar.